Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap for Wednesday, June the 1st, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we come together in these live sessions to take a look at the market macro to micro, drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're interested in checking it out, I'll put up my contact information in just 1 second. Before I do that, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so if you want to get a hold of me, just send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here in the go-to during these pre-market sessions, and then live trading and analysis during the course of the trading day. You will need a Skype account, so send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And if you like this video, there's tons of these, 2 years of these up in YouTube. Just do a search for Quantum Leap Futures. And if you like what I do, follow me at Twitter at Crazy2. Okay, so yesterday our main hypothesis was a move down into the 98, 97, possibly 93 area, and then rotate back up through and get a continuation day. Our second hypothesis was a move and a false breakout above 2102.75, and then a rotation all the way down, through to the VPOC, chop around there, and then a move down into that naked VPOC down at 87.50, possibly probe the gap that we've got below. It turned out that Hypo 2 played out in its entirety, and then we had a late day rally as the shorts were covering, and we rotated back up in around that 89.95 area and closed at 94.75. So interesting day. I actually held one overnight and traded. I was hoping that we'd get the continuation overnight. I finally dumped it out at 95.75 before I went to bed because it was starting to look real weak. This morning's news, we've got 9:30 Eastern. We have Canadian RBC manufacturing PMI. We have 9:45 final manufacturing PMI for the U.S. and then 10 o'clock is the big news. We've got ISM manufacturing, construction spending, and ISM manufacturing prices. Don't forget, we've got total vehicle sales all day, and then we've got Beige Book coming out later this afternoon. So there's a fair amount of news. The big news will be 10 o'clock. Europe and Asia, most of the markets were down overnight or are down right now. So we are seeing some weakness coming into the market. So each morning I like to start my day with a basic candlestick chart. I start with a monthly. Then I work my way down. I'm using a 9 EMA and a 20 SMA. What I want to see is where are we within the time frame for a trend, or are we challenging the trend or violating. See, we've had this beautiful move up over several years. The end of 2015, they challenged the trend. They took it back. Beginning of 2016, they challenged it again, and so far we've taken it back, and we're holding above the 9 and the 20, so we get possible continuation on the monthly. On the weekly, we've got slope and separation. We are holding above the 9 and the 20, and we've tested the 9 last week and the week before, but since then we've bounced and moved back down to test it again. Will take us down into the 61 area, and that's back at that microcomposite VPOC at 63.50 that we're watching. But so far the week is looking, the continuation of the trend up. On the daily, same thing. We've got slope and separation. We had talked about this technical gap. They're coming down to close that technical gap. That'll bring us down to the 83, 82 area. That's our key line in the sand right now. That's that microcomposite LVN at 82, and the week low at 80.50 in the start of that gap zone. But we do have slope and separation, although we're losing a little bit of slope here as they come down and close this technical gap. As we move down into the intraday, things change a bit. You can see that we've rolled over. We're below the 9 and the 20, and we're starting to see some slope and separation to the downside on the 4-hour. So we are seeing some weakness on the 4-hour. That continues as we move down in time frames. You've got a nice trend going here. This is a continuation trend. We tried to take the downtrend back overnight, and now they've continued it. We've got good slope, good separation, and prices paralleling the 9 quite nicely. Going to the 30-minute, same thing. Good slope, good separation. We're paralleling the 9 EMA nicely, and seeing some further weakness on the 30-minute. And then as we keep going down, you can see same thing. They tried to take it back, but failed at the 20. Now back below the 9. Continuation of the trend to the downside. And finally, the 5-minute is we're down into this consolidation. Got a possible inverted cup setting up on the 5 minutes, so we'll have to keep an eye on that and see if they come down into this 86.50 to complete the cup and then get a bounce up. Let's take a look at what the bounce would be. Do this reverse here. So we'd be coming back up into the 88 and a quarter up through to about the 89.50. If we come down and set the inverted cup up, but pattern's not a pattern till it is. Okay, so let's put this away. Take a look at the big picture, the structure. Again, want to put this into context, so we're bringing in the last quarter of the prior year. We had this microcomposite VPOC microcomposite that ran through, from October through to the end of the year with this upper Gaussian distribution here, with the key support being at the 2016. We got back up inside of this, and we created this balance zone here, and with the microcomposite VPOC at 2051. Shorter time frame was 2063 and a quarter. Then we broke out, and we're creating a balance zone up here in this prior microcomposite VPOC. The value area high is up at 96.75. The value area low is right on top of the value area high of the longer time frame. The VPOC on this is at 85.75. Our current VPOC, microcomposite VPOC, is slightly higher at 87.75, but basically we've come back and we're trading inside of this balance, and we're likely to test this balance and probably come down and test the lower side of this balance between the 82 and the 80. We've got this gap zone here that remains open with that measured move on that broadening megaphone pattern we were looking at yesterday. The midpoint and the measured move is down at 79, and that's right in the middle of that gap. Just take a quick look at that gap zone. Here's our flex levels, and this is the gap zone we're talking about, and the middle of that is 79, and that is the measured move with the break below the lower line of the megaphone that we were looking at yesterday. Sorry, I think I'm going to lose my voice. All right, so other than that, there's not more information. Key price acceptance is right in this 85 to 87. We're likely going to open up in that area, and then we'll have to see who takes control early in the RTH session, whether they take us down into the 82. Anything below 82, I'm looking for a move down into that 79, 78, 75 area, with possibility of coming and closing the gap. The gap is closed at 77.75. The naked close is at 75.50. And remember, 75.50, you can't see this. Let me just move this to the back. 75.50 was where we accepted value after the breakout of this balance that we've been chopping around inside of. Remember that the composite VPOC, or the most accepted price, going all the way back to the beginning of 2013, shifted from the 61.50 down to 51. So as we come back into this distribution zone, again, we have undetermined fair value in this area, and we're likely to come back in this area if we don't hold the 75.50 area and come back and chop around in this area again. And it's just, it's getting very crowded down here in terms of the repair work that we've got to do to the auction. All right, so let's take a look at the overnight, start moving our levels over. So overnight we have a high at 99.25, which is basically sitting right on yesterday's value area high. And we have an overnight low. So far, we still have 30 minutes to go, and we're only a point away, so we're most likely going to put in a new overnight low, so we'll just have to keep an eye on that as we move down here. This 86 is really a weak low. If you look at the market profile, this is a weak low down here. We do not have any good tapering, so if we come down here and challenge this, we're likely going to test the lower side of it, and that's why I'm thinking we're going to probably come down into that 82 level and test it sometime between now and the completion of the IB. Our VPOC did shift. It was up here in the 94. It shifted down to the 88.75. And that's just below the value area low from yesterday at 89.75. And then overnight we had a double distribution. So we've, between the upper distribution and the lower distribution, we've got this low volume area between 91 and 91.75. So 91.75 is going to be my key trade area coming into, I'm going to use 91.50. But I don't want to be long until we're above 91.75. I don't want to be short unless we're below 91. And then just below it, we've got the value area, but I really don't think that's going to come into play because we're getting this this lower distribution, and the VPOC overnight is right around there. So I think we're going to chop around there. So I'm not going to use the value area low as a trade level. I'm going to wait and use the LVN from overnight because it's much more significant to me if we break above it or reject it from below. But just be aware that this 89.75 does represent our value area low. And then just below it we have the value or the range low from yesterday at 86. This is a weak low, and it's right on top of that microcomposite VPOC at 85.75. So this is going to be another trade area for me, because if we break it, I'm looking for us to come down and test our key line in the sand. Our key line in the sand is going to remain at 82. And below it, I'm targeting the 79 area. Our daily ATR, our 20-day ATR is running at 27.75. So our downside daily ATR target does take us down to the middle of the gap, and that's 78.50. Below that, we've got the 75.50 as a target with the naked close and the former microcomposite VPOC, and then below that, a little bit of support at 72. This actually should be 73.25. And then below that, 71.75. And then our key line in the sand, our next one is going to be that 69. This should be 69.75. Below that, I'm looking for the bigger move down into the 61.63 area, and that's where the composite VPOC was before it shifted down to that 51. Don't think we're going to get there today, so I'm not going to really worry about that. I think we're going to have a balanced day again today. To the upside, above the 91.75, you want to look for a move back to balance yesterday's VPOC at 93.75 and the close, the naked close, at 94.75. Then above that, we don't need this anymore, so let me get rid of this. Above that, we've got the value area high from the microcomposite at 96.75. And then the overnight high at 99, which is sitting right on top of the value area high. And then anything above that, I'd be targeting the range high at 0150, and then all our targets remain the same above. There's going to be, this is now shifting down to 2103.75, the week high so far, and then the adjusted all-time high at 05 and a quarter. Our daily upside ATR target based on the current low of 86.50, this could shift down a bit if we put in a new low, is at 07 and a quarter, and then the rule of 10 at 2110, and then our measured move at 1475 and 25, and then the equalization of the the all-time high up here at 2134. Our weekly ATR is shifted down from 55 down to 45 on the upside, and our weekly downside ATR is shifted to 44 and a quarter. So we still got some range. All right, so those are the levels. How do we trade it? What are our hypotheses right now? My main hypothesis is we're going to open auction in range outside of value. So we're going to open it up outside of value. So initially, I'm looking for them to move up into testing the 89.75 to 91.50 and finding some initiative sellers up here, and then rotating us back down through to the 82, with the main target being the mid of the gap down at the 79, 78, 75 area, and hitting our daily downside target. So hypo 1 is open auction in range, out of value, move up, test value, maybe dip inside of value. We could even possibly poke up into the 93.75, but I'm expecting initiative sellers to step in and rotate us down and test the lower side of this balance of the microcomposite, and test that 82, chop around there, and probably do a late day probe down into the gap zone at the 78.50. That's hypo 1. Hypo 2 is a open auction just inside of range, maybe even just outside of range. We still have 25 minutes to go lower, and then a move down, testing the 82 area, find responsive buyers, rotate us back up, and come up into this 93.75 and chop around there with a possible late day probe up into testing the 2100s again. So that's hypo 2. Hypo 2 is open auction in range or just outside of range, chop around, come down, find responsive buyers somewhere in the 82 to 80 range, rotate back up into the 93, chop around, and possibly a late day probe up into test the 2100. Hypo 3 is a open auction in range, hold the range or get a false breakout, and then rotate back up and chop around in balance for the rest of the day with a possible probe up into the 99, 2100 area. So hypo 3 is basically chop, false breakout, come back into balance, and chop around and trade inside of this wick right here, getting stuck in the wick. And then hypo 4, the alternative, is we open auction out of range or just inside a range, chop around, move down through to the 79 area, chop around there, get a continuation wave, and come down into the 71, 75 area and close down inside of the 70s. So those are our 4 main hypotheses. I think we're going to get a rotational day. We've got we've got news. Be wary of getting stuck in this wick today. Taking a look at the Keltner, we have our Keltner center line at 91. That's at LVN from overnight. We're below it now. A move down to test the lower Keltner is going to take us down into that 85 area and back into the balance around the microcomposite VPOC. A move above the Keltner, it takes us with a possible move up into the 97 area. It's probably going to be more like the 94, 95, that VPOC and naked close we have from yesterday by the time we get there, just based on where we're trading right now. But we are seeing some weakness in this market. Doesn't mean that you got to get your bear hat on because the buyers are going to step in. We're still too close to the 2100s, and we still have some repair work to do above. Taking a quick look at gold. We're balancing. We were talking about that 22 level yesterday, and a move to test that if we got above the 1790 area. Right now, our balance is down here at the 1216 area. We're currently trading just above this LVN. This is going to be your key line in the sand for gold today. If we can hold that, I'm still looking for a move up into the 25, 26 to test the range high here. And of course, if we can accept that value, a move up into the 32 and ultimately coming back up into the composite VPOC that's sitting at 1237.60. Adjusted to the new contract, and that is the most traded price going all the way back to October of 2008. So I don't think we'll get away from the composite VPOC. If we break the 1209, we talked about this yesterday. If we break the 1209, look for the move down to 06 and likely come down and test the lower side of this balance at the composite LVN here at 1198, and that's our key line in the sand below. If we break below it, then I think a bigger move, and the move down is going to take us all the way down into that 1159 area and back, from where this breakout started, and the move up into the 1200s. So I still think gold's going to hold. I think it's going to rotate back up into the 1237, especially with what we've got going with the Brexit, and currencies are going to suffer some, and I think you're going to see a rally in silver and gold in the next few weeks. All right. So that's going to complete our pre-market session. Just before we do, let's just take a look at where liquidity is. We are making a new overnight low, so we're going to have to adjust this. We're now back down at the 84.50. So now we have to make some adjustments here. 84.50 and coming down even lower. So we may even, we're going to probably open up outside of range and outside of value. So we have to add one more hypothesis to the mix. If we open outside of range, outside of value, we have to be looking for the possibility of an open drive and initiative sellers stepping right in and just taking us right down and setting up for a possible trend day. So just be careful. We've got lots of news to ignite this, and again, we're probably going to continue to put a lower low in as we move forward into the RTH session. So we're likely to take out the overnight stat right on. We'll probably do a make and break on the open unless we get some type of a larger rotation up off of the Keltner lower line. Keep an eye out for a possibility of that double Renko reversal setting up for the open of the session. All right. That's going to complete our pre-market. I'm going to go ahead and close the room down, and then I'll open it back up so I can grab the recording. Trade well, trade safe, and catch you on the flip side.